We're continuing with the process of producing a cash budget by completing a cash payment schedule. We've already completed the following budgets for Gratman Manufacturing's master budget process: sales budget, production budget, direct material budget, direct labor budget, manufacturing overhead budget, ending finished goods inventory budget, cost of goods sold budget, the selling and admin expenses budget, the budgeted income statement, and finally the cash collection schedule, which we need in order to produce the cash budget. I've already introduced the structure of the cash budget, and for this video, we're going to focus on cash payments. What are cash payments? Cash payments are planned cash outflows for the period. They are made up of payments for different items. First and foremost, the payment for inventory, which is represented by accounts payable on the balance sheet. Other cash payments include payments for the labor force, payments for the cost of manufacturing, grouped together as manufacturing overhead. This includes payments for things such as factory insurance, property taxes, rent, indirect labor, and indirect materials. Payments are also made for period costs, which includes payments for selling and administrative expenses. There are also payments for income taxes paid to governments, and finally, payments made for the purchase of new equipment. True, there are other cash outflows, but these are the main ones you're likely to see. Note that any expenses which do not require a cash outflow, such as depreciation expense, are excluded from the cash budget. In this video, we'll be focusing on cash outflows caused by payments for inventory, raw materials inventory to be specific. These are represented by accounts payable, and to do that, we'll use a cash payment schedule. In order to demonstrate the cash payment schedule, we'll continue our example of Gratman Manufacturing. Gratman Manufacturing purchases all their raw materials on account. Management has the following history of cash payments. Percentage paid in the month of purchase, 60%. Percentage paid in the month after purchase, 40%. Total purchases for the month of December are $2,153,000. Prepare the cash payment schedule. Step 1 is, prepare the cash payment schedule. In order to do that, we'll use a chart with 9 columns. Note that you can create this chart in Excel, but I'm going to do it on my slides. For headings, we'll start with the month in the first column, raw materials purchased in the second column, when paid in the third column, percentage paid for the fourth column, month paid, fifth column, and then we'll add all the months in separate columns: January for column 6, February for column 7, March for column 8, and finally first quarter, the total for column 9. We're going to start in the first row, first column, with December. Why? Because the question tells us that all raw material purchases are on account, and that means that December purchases of $2,153,000 are all on account. The history of payments tells us that December purchases are paid 60% in the month of purchase, which is December, but 40% in the month after purchase, which is January. And as we are budgeting for January through to March, we need to start with December raw material purchases of $2,153,000. When will we pay for these purchases? The history of payment tells us that 60% will be paid in the month of purchase, so we add that to our chart under when paid, month of purchase. What percentage will be paid in that month of purchase? 60%, as noted in the history of payments. We will then add the month paid. The month purchased is December, and that is paid in the month of purchase, so that's December also. Now, these payments are made in December, but I'm not tracking December payments because my budgeting period is January through to March. Because of that, I totally ignore this line item. I don't do any calculations, nor do I add anything to my remaining columns. Why then did I include this line item? Because I like to be systematic and think through the process. You can omit this line item, but I prefer to keep it in. The total for the quarter is January plus February plus March, all equal to 0, so we place 0 in our first quarter column. We now move on to the next row. We are still working on December, and the raw material purchases are still $2,153,000, so I don't bother copying these down. However, I do need column 3, when paid, which we get from the history of payments. A total of 40% of raw material purchases made in December will be paid in the month after purchase, so I add the month after purchase in the when paid column. I then add the percentage paid, which is 40%. So 40% of December raw material purchases will be paid in the month after purchase. What is the month after purchase? Purchases in December, month after purchase is January, so we place January in the month paid column. Do we have to do a calculation? The month paid is January, and we have a January column, January to January, so yes, we have to do a calculation. Raw materials purchased is $2,153,000 multiplied by 40%, which is equal to $861,200, which is placed in the January column. Of the $2,153,000 of raw material purchases in December, the company will pay $861,200 in January for those purchases. We can now calculate the total for the first quarter, adding January of $861,200 plus 0 for February, 0 for March, for a total of, first quarter, $861,200. We've now finished December, so we can move on to January raw material purchases, which we get from the direct material budget, a budget we already completed. The total cost of direct materials purchased in January is $1,814,400, so we transfer that into our raw material purchases column, $1,814,400. When did we pay for these purchases? We get that from our history of payment schedule, but since it's identical to what happened in December, we can simply copy it down. When paid, month of purchase, percentage 60%. Now, what is the month paid? January purchases will be paid in the month of purchase, which is January, so we place January in the month paid. Do we have to do a calculation? The month paid is January, and we have a January column for our budget, so yes, we have to do a calculation. Raw materials purchased of $1,814,400 multiplied by 60% is equal to $1,088,640, which is placed in the January column. Of the $1,814,400 of raw material purchases in January, $1,088,640 will be paid in January. We now calculate the total for the first quarter, adding January of $1,088,640, February of 0, March of 0, for a total of $1,088,640 for the first quarter. We now move on to the next row, and we're still working on January, and the raw material purchases are still $1,814,400, so I don't bother copying these down. However, I do need column 3, when paid, which is a copy from the history of payments, month after purchase, and the percentage, 40%. Same as December. Just copy it down. Purchases in January paid in the month after purchase, and the month after purchase is February, so we place February in the month paid column. Do we have to do a calculation? The month paid is February, and we have a February column, so yes, we have to do a calculation. Raw materials purchased of $1,814,400 multiplied by 40% is equal to $725,760, which is placed in the February column. Of the purchases made in January, a total of $725,760 will be paid in February. We can now calculate the total for the first quarter, which is January of 0, $725,760 for February, 0 for March, total of $725,760 for the first quarter. We've now finished January, so we move on to February raw material purchases, which again we get from the direct material budget. Total cost of direct material purchases for February, $1,953,420. So we transfer that into our raw material purchases column, $1,953,420. When did we pay for some of these purchases? Same as December and January, we simply copy down when paid, month of purchase, percentage paid, 60%. February purchases paid for in the month of purchase means that the month paid is February. Do we have to do a calculation? February to February? Absolutely, we have to do a calculation. $1,953,420 multiplied by 60% is equal to $1,172,052 in the February column. We now have to calculate the first quarter. 0 plus $1,172,052 plus 0 is equal to $1,172,052 is paid in the first quarter. We now move to the next row. We're still working on February, still with the same raw material purchases of $1,953,420, so I don't bother copying these down. However, when paid is a copy from the history of payments, which is the month after purchase and 40%. Same as before, so we copy it down. Purchased in February, paid in the month after purchase, and the month after purchase is March, which is what we place in the month paid column. Do we need to do a calculation? March to March, we absolutely need to do a calculation. Raw materials purchased of $1,953,420 multiplied by 40 is equal to $781,368, which is placed in the March column. Of the purchases made in February, $781,368 were paid for in March. Total for the first quarter is 0 plus 0 plus $781,368 for a first quarter total payment of $781,368. We finished February, so we move on to March raw material purchases, which we get from the direct materials budget. Total cost of direct material purchases for March is $1,997,100, so we transfer that to our raw material purchase column, $1,997,100. When did we pay for some of these purchases? We copy it down, same as for the prior months. Month of purchase, 60%. Now, what month will the 60% be paid in? March, month of purchase, is March. Put March in the month paid column. Do we have to do a calculation? March to March, we absolutely have to do a calculation. $1,997,100 multiplied by 60% is equal to $1,198,260 in the March column. Add up January, February, and March to determine the first quarter total payment is $1,198,260. We now have to move to our second last row. Month and raw material purchases identical, so I don't copy it down. When paid, month after purchase, percentage 40%. Purchased in March, paid in the month after purchase, and the month after purchase is April, which is what we place in the month paid column. Do we need to do a calculation? Absolutely not. My budget is from January to March, so I'm not tracking April payments. This is outside of the budgeting period, so I don't do any calculations. This amount will show up in the second quarter budget. First quarter total for this row, 0 plus 0 plus 0 is equal to 0. What do we do now? We need to add the total cash payments for every single month. So I start by adding the January column. $861,200 plus $1,088,640 is equal to $1,949,840. Let's do February. $725,760 plus $1,172,052 is equal to $1,897,812. March, $781,368 plus $1,198,260 is equal to $1,979,628. I now need the total for the first quarter. I can either add up the column or I can add up the total cash payments for January, February, and March, which is the method I'm going to use. $1,949,840 plus $1,897,812 plus $1,979,628 is equal to $5,827,280. This is the total cash outflow for the first quarter. We have now completed the cash payment schedule. We're now ready to complete the cash budget, which is a topic for a future video. Thanks so much for watching.